Okay, well, let's go ahead and kick off. I think we've got just about everybody in the room, and we'll go ahead and walk through the presentation today. And today, just like last week, we have 4 modules to go through. We'll go through a set of slides on each of the modules and then stop and take questions. For those who are new, we've got a question box in the lower right-hand corner. Feel free to type in your questions and we'll answer those as we go through it. We are recording the presentation and we'll upload that like we did last week and we'll send that recording to you, or a link to the recording, along with the slides. And so what you see here you'll get at the end of today. After 6 tonight, I'll be able to send that back out to you so you can have that to follow up as we go through the process. So the first module we have today is called Selecting an Attorney. And of course, when you're raising funding, it's important to have legal counsel along the way for many reasons. And when you go to select an attorney, you need to make sure that you get someone who's going to do more than just the legal work. You can get more bang for your buck or value for your dollar if you choose the right attorney. There are many attorneys in town, and most everyone I know does a quality job on the legal side, but as entrepreneurs, we're trying to get a little bit more than that. And so what you want to look for is, first of all, somebody with a good name. When you go to angel investors and any funding sources, one of the first things they look at on your executive summary is the attorney that you have. Do you have someone reputable? Do you have someone that they know? Do you have someone that they trust? And to the extent that you have someone like that as your attorney, it builds confidence in the investor that you're a good deal to invest in. The second thing you want is someone who's charging a reasonable price. And it's often the case you'll hear of attorneys that will defer fees and will charge you later, but it's still the question, well, how much do you charge per hour? And in today's world, because we're usually early stage and we're growing companies, we really have to have good prices, and we're usually in about the $200, $250 per hour range. And deferring fees are fine, but you always want to put out there what is the price that you charge for your services, as there are firms that do good work, but they may be offering more than what you need as well. And then the other one is, you don't necessarily want the cheapest one in town. You want people that do have a good name and have experience doing this type of work as well. So you want somebody in that middle range as well. And you want to get referrals from some other people to ask, well, how was that experience for you? And then get someone that does a quality service. So these are the things that we're looking for in an attorney that can do this for you. The other thing you want to look for is angel or attorneys that can bring you connections to angel investors. And that's a good question when you're interviewing attorneys, and it's good to interview 2 or 3 to do a little bit of comparison. Aside from the things we saw on the previous slide, how many connections can they make for your deal? And can they make introductions to investors as well? And do they have any experience with investor groups? Oftentimes they've worked with other clients that have gone through angel groups or funding process, and they have some experience from those other client dealings that they can share with you. And so you want to ask about those. And then do they have a credible reputation with investors? How much do they know about investors and so forth? Then the next one is, when you get there and you are interviewing them, ask for a list of funded companies they've already helped, and see if they've already helped raise funding for startups. Well, who are those companies? And see if your company would fit well on that list or if it would not fit well on that list. And then here's where you can start to get a little bit of intelligence from the attorney beyond legal work, is to try to learn from the experience of others. What did other companies do to raise funding? How long did it take for them to raise funding? Who did they end up contacting and get funding from at the end of the day? And then, of course, what did the attorney do to help them raise funding? Did he make introductions? Did he advise? Did he coach? What did he do in this respect? And then when you get into the cost issues, then as always you ask about the cost of it. Make sure you ask if they have any packages for fundraising. It's often the case that some attorneys in the interest of getting your follow-on business, will give you a good rate on the upfront funding documentation. In a Series A documentation, there are many documents that must be filled out. There's 9, 10 docs, depending upon what deal structure you have or the attorney itself. And oftentimes they will discount that with the idea that they will get follow-on business for you in the future, and you might think about asking for some packages. And of course, ask if they will defer their fees till after funding. Many will defer fees. If not all of it, they will defer a portion of it, but you have to ask for it and negotiate for it as well. And then make sure you find someone that is local and not out of state. It's often the case here in Austin that we'll have somebody who has an attorney friend in New York or Silicon Valley, and they want to use that person. But the disadvantage is their location greatly impacts their ability to help you raise funding. So I would always recommend getting someone in the area, because they will have clients and they will have investor contacts that can help you beyond what the people on the East Coast or the West Coast might be able to do for you. And also, you're looking for someone who is going to do the work itself and not delegate it out. When they start to delegate it out, you start to get probably reduced levels of service, and you always want to ask that question, how much do they do versus delegating it to other people in their office as well. So let's stop and ask, what questions do you guys have? If you want to type those into the question box, let's look at this. All of this that we just talked about on the attorney side also applies to the accountant. Typically, accounting isn't the big issue up front in fundraising, but many of the same concepts apply to the other service providers, finding people that can help you beyond just doing the core service in respect to introducing you to investors and providing a relationship and so forth. So let's see what questions come in. All right, the first question is, do you have attorneys you recommend? The answer is yes. I've got a list of attorneys that I've worked with in the past that I can say they did a good job and charge a reasonable price. So if you need help with that, I can always point you to the right people. The next question after that is, what is the charge that they put for a Series A term sheet? Well, the people I deal with are charging anywhere from $10,000 to $15,000 for a Series A package of documents. A Series A term sheet has the subscription agreement, the term sheet agreement, accredited investors, employee stock options. There's quite a number of things that go into those packages, but they're in the $10,000 to $15,000 range that we normally deal with. And that, of course, is subject to change over time and how many hours they're putting in on your deal as well. One of the things I found with attorneys is that they're also very helpful in coaching you through the negotiation process. I have sat in entrepreneur-investor negotiations in which investors start asking for terms, and not being very well educated, the entrepreneur is now leaning over to ask their attorney what those terms mean. What does liquidation preference mean? What does investing founder shares? What are information rights? And you want to get your education going before you get into the negotiation, and your attorney can help you with some of the more key provisions of this. So you want to make sure you get with your attorney before you go through a negotiations to actually get as much knowledge as you can about these things. I don't see any other questions, but if you do have questions, feel free to type those in. Let's move on to the next set of slides, and we'll look at how much funding should you pursue. And I get asked this question quite a bit from first-time entrepreneurs. They come in and they want to know how much they should raise as they strategize about their overall fundraising effort. And what many of them come in is with the expectation that they just want to raise $1 million. It seems like a nice round number, and it will cover everything. They don't know exactly what they're going to do with it, but it just seems like that's the right number we should be going to raise for. And they have some idea that they've got to spend money on marketing and sales and product development, but they really don't know how that money is going to be divided out. And so before you approach investors, you really need to have figured out the fundraising strategy, which is you've got a team, you've got a product, you've got a target market, you're up against certain competition, and you're trying to get to a certain place, revenue, product, etc., with the fundraise, and you're trying to figure out, well, how do you get there? And so first of all, you need to have financial projections that have some basis in reality that you can go point to that show how much money you actually need to raise and how you're going to use those funds going forward. And typically people that don't quite know how much they're going to raise haven't gone through the financial statement exercise in projecting out what they're actually going to do. And we need to do that at some level just so we all get in the right ballpark. But you have to consider your needs before sales. Most people underestimate sales. They have sales rocketing upwards, but they don't have sales commissions in the financial statements. And so if sales are going up, your costs are going up because you're paying additional commissions and you're probably doing additional activities to keep up with the closing those sales and servicing those customers. Marketing, generating leads, getting the word out and so forth will cost you money. And even though you may have developed a product, there's almost always more product development that needs to be done, maintaining the product, increasing the value of the product, etc. So you need to go through and figure out also what equipment you may need in order to sell and run an office and so forth. And it always takes longer than you think. The rule of thumb is it will take you twice as long to get where you think you're going to go. And so people who make overly optimistic financial projections are often challenged to get to that goal with the fundraise that they have. But the question now comes up is you're going out for your first fundraise, how much do you raise right now? And as I said before, entrepreneurs often ask for $1 million in the first round. And what you'll find is that typically you may not have yet a shipping product, you don't have sales or a lot of sales already accomplished, and your team is probably going to be incomplete from what you expect it to be and maybe what the investor expects it to be. And for those reasons, you're going to receive a lower valuation. Valuation is what is your company worth before the investment money goes in. It's what's called pre-money value. And what you'll find is that that number determines how much ownership the investor gets. So if the investor is putting in money and you have a very low valuation, that money is going to cost you more equity to take on. If you have a higher valuation, then you're going to find that that same money will take less equity in order to bring it into the door itself. And because you're at the very early stages with your company, typically you don't have all complete product sales and so forth, you're going to get a lower valuation than otherwise, and you almost always are going to get a lower valuation than what you expect you're going to get. And so for that reason, what we want to do is you want to raise as little money as you have to on this first round when the valuation is not so good. And then as your valuation takes a stair-step function up, as you increase the product and as you sell more of it and as you build out the team, and then you take the majority of that fundraise and put it on the other side of that stair-step function, and then now you're going to be raising the rest of that money at a much better valuation. So mostly what I talk to entrepreneurs about is let's look at a $250,000 to $500,000 raise for the first round. It'll shorten the amount of time you have to go out for raising funding. You won't have to give up so much of the company for the money. And when you get in a better position of having shipping product and customers, you can raise more at a more advantageous level for your company itself. So this is the advice going forward is let's see what we can do here. So we're going to take our $1 million and we're going to break it into a series of rounds or multiple rounds. And so we're going to start with maybe $250K in the first round. Don't give away so much of the company. And then after the product and customers are there, raise more itself. So let's stop and talk about what questions you have about how much to raise and when to raise it. Of course, these numbers vary depending upon what you're trying to do, what stage you're in, and how much money you need to get to the next level in the company itself. But as we said last time, for every $1 million you're trying to raise, it will take you 1 calendar year to raise it. So you might want to lower the bar, if that's your expectation, to something less and not spend so much time on the road raising funding itself. So what questions do you guys have? So the first question is, do I have to give up equity? The answer is no. There are other deal structures out there. You can do two things. One is you can do what are called convertible notes. A convertible note means that you're basically giving the investor an interest in the company as far as a debt interest that will convert later when you do make an equity raise. What you'll find is that very few investors like convertible notes, and they can be very hard to close a large deal on. It's difficult to get too much money off of a convertible note. The other one is what's called revenue-based funding, and that's when the investor is getting a percent of revenue instead of equity, and then you don't have to go through the valuation or the discussion about giving up any ownership as well. Some entrepreneurs are wanting to keep as much ownership as they can up front and have enough margin to give out a portion of the revenues going forward. Other people don't have as much margin, and so they have to give up more of the equity in order to bring investors into the deal itself. One of the challenges with equity today is the length of time it takes to pay back or to have an exit to pay back the investor. It used to be that investors would get an exit in 3, 4, 5 years. Today, it's not uncommon to see investors in deals 8, 9, 10, 11 years before the exit actually comes, because the IPO market is not what it used to be. There's not many people going public, and of course the M&A market is slowed down a great deal. It takes just many, many more years to get a company in a place to actually be bought out by a bigger company as well. That's not true for all companies, but for many companies it is, and for that reason you'll find some investors slow to go after the equity raise because of that reason. What other questions do you guys have? So next question is, if I want to raise more than $1 million, how long will it take me? Well, it's hard to say. We need to talk about your situation in particular, and it really goes back to how much of the company you have already built up. If you have a product shipping and you have the full team and you have customers buying it, well then it won't take you as long because you've taken risks off the table. On the other hand, what you may find if you don't have a product shipping, that asking for more than $1 million might actually take you more than a year to go get all of that raised. And so we'll have to sit down and look at your situation in particular. Okay. Let's go on to the next set of slides. So just to summarize what we just said, $1 million will take you a year to raise, and as you go out before you have a shipping product or customers, you'll be giving up more equity rather than less. So you want to think about that. And you should consider raising a smaller round at the very beginning, because you'll find a little bit of money can take you a long, long ways. And if you can get to a place where customers are actually buying your product, you rely less and less upon investors and raising funding and more upon your core business of customers buying your product, and then you'll have a much easier ride. And as over time, as you build up the company, your valuation improves, and then you can raise more money without giving away so much of the company as well. So let's go on to the next section, which is how to find angel investors. I'm getting this question a lot. So let's assume you have a product and that you've found a few customers already, and people are actually buying it enough to show that people will buy your product. The product works. People are happy with it. That's what investors are looking for. And you've got your documents together in the form of an executive summary. Well, now we're ready to start looking for some angel investors. So we're kind of ready to go out and start to engage them. And the first place you go look for is family and friends. And what you're trying to do is go to people you already have a relationship with, those who are active angel investors or those who are interested in investing in startups. Not everybody in the family and friends are, but some are. And you want to start working with them. You know, closing a round of angel investing is, working to build a relationship, and then you educate them on your deal, and then you can close the round. And with family and friends, you already have the relationship in place. Also, you want to check out your coworkers. If you're working in a company or a large company, you want to check around to see if anybody else is interested in diversifying into startup investing. And then you go through your Rolodex to see who might be a potential investor. For those who are new to angel investing, what you're looking for are what are called accredited investors. As we discussed last time, these are individuals with a net worth that's worth more than $1 million, not counting the house they live in. And today that's many people. There's a very large number of people out there that qualify as accredited investors. They may not be active angel investors, but they qualify as accredited, and you want to go look for those guys. The next place is to go and look in the formal angel groups. There's many in the state of Texas. And if you want to find a list of most of the formal angel groups, you go to the Angel Capital Association. It's a trade organization based in Kansas City that has, I believe, now over 750 angel groups in its membership, and they're all listed on their website. You go to their website and you can actually see all the angel groups that are out there that are of a substantial size. And so if you look at angelcapitalassociation.org, you'll find their website. You can also Google Angel Capital Association and it will come up. The other one is you'll find that there are informal angel groups, and there are groups around the area that do informal pitch sessions and funding forums in the community, and through networking and through other resources you can find these. So even if they only offer mentorship and practice, what you'll often find is that those who are participating on the panels as judges or coaches or mentors are also angel investors. So the group or the event may be around mentorship or pitching practice and what have you. That's okay. By all means, make use of that. Go out, get whatever benefit they may be offering, and then go to the people who are on the panel and ask, are you an angel investor? Are you an accredited investor? And ask for a follow-up meeting. They may not come over and ask you because they're there with their mentorship hat on, but if you go ask them, you may often find that there's some interest in learning more about your deal as well. Around the universities, they have what are called business plan competitions. And in those business plan competitions, oftentimes the university will ask you to come out and sit on those panels. And you may be asking yourself, why would I want to go sit on a panel to judge a student business plan? And the answer is because all the other people on the panel with you judging it are almost always accredited investors. Many are experienced angel investors, and many are active angel investors, and it's a great way to network. And so you want to go to the business plan competitions and offer your services to coach the students, sit on the panel, provide feedback, etc., because in that judging pool are many angel investors you want to get to know. Accelerator programs are the same way. If you go to incubators and you go to accelerators, you often find that it's the other people on the panels that you want to get to know. And of course, the cost is simply a little bit of advice to the students who are pitching and sharing your experience with them, and then you get a chance to network and meet more people. The other group you want to go to are your service providers. As we said before, you want to choose an attorney and accountant that can do more than just do the legal work or the accounting work. You want people that know other people in the community. So those who are active, well-connected, have a rich Rolodex, those are the guys you want for your attorney or accountant. It may be worth paying a little bit more per hour to get those guys because they can connect you with key people that can help you along the way. The other thing that you want to do is look at social networks. What we find with investors is that while they're not that active on Twitter or Facebook, they are very, very active on LinkedIn. You go to LinkedIn, Google angel investor, private equity, venture capitalists, etc., put in your city or location, and you'll find quite a few people popping up on the LinkedIn profiles, and you can oftentimes reach out to them and engage them in a discussion through LinkedIn. It doesn't happen with everybody. Some investors will only talk to you if they come through a trusted network or referral, but if you know who the target is, you can leverage your network to get an introduction from somebody else that may know those people as well. But LinkedIn is the social network that you want to use. Some people use Facebook. I've not had much luck with it. I just don't find many investors on Facebook, but you may be doing better with that as well. Another group to look at are the crowdfunding websites. There are numerous websites out there that connect angels to entrepreneurs, and so what you'll also find is that there are crowdfunding sites that match investors with deals, and I'm finding an increasing number of entrepreneurs are using these sites to get in touch with potential investors. AngelList, AngelSoft, Gust, and others are out there doing this type of work. So let's stop and ask what questions you have about finding angel investors, and if you have any feedback about looking for angel investors, we'd love to answer those questions as well. So the first question is how do I make contact with a formal angel group? Well, the first thing you want to do with a formal angel group is you want to go and look at their website and familiarize yourself with their process. Most angel groups, formal angel groups, have a very specific application, screening, presentation, follow-up process. They've got dates on their website. They've got fees you have to pay and so forth. They've got a director there. And what you want to do is just get more familiar with what happens, when it does happen, etc., so you understand how to go through it. And so the key there is you want to look at the website before you go contact them. You may find it difficult to get a hold of the director or whoever, so you might want to find someone else associated with that organization and ask them about the process, get more detail about how it works. The best thing with a formal angel group before you go to them is actually get someone who is inside the group that coaches you on the process of working with that particular group. Every group is a little bit different. They have a little bit different careabouts, and even if somebody went through it 3 or 4 years ago, you may find that that formal angel group is very different today in what they do and how they do it. So you need to find someone that's currently in that group or currently in the process and invite them out for a coffee and ask them to give you as much information as they can about the application process, who gets funded, how did they get funded, how long did it take, what did it cost, what did the successful people have to do to get funded, etc. So there's a lot of work you might want to do before you go through the process. Some of the groups I've been involved with, deals just come up over the transom, and they really have no idea what we invest in or what the group invests in. What was interesting when I was with formal angel groups is that it was about half the deals did not meet the criteria. So if you look at the website, look at the criteria of what they're going to judge your deal by and ask yourself the hard question, do I meet the criteria? 50% of the deals that come into formal angel groups do not meet the criteria and are pretty well thrown away right there on the spot, and you never get any further with it. Too bad you spent the money on that. What other questions do you guys have? So the next question has to do with an attorney and how do you get an attorney to give you a list of investors? Well, what I find is that attorneys just aren't going to hand you their Rolodex, but if you work through the process of raising funding, what you'll find is that they can give you introductions, and they can, based on what they're trying to do is figure out if your deal is a good match for that investor, and so they'll make an introduction here and there, but they won't just give you the list of everybody they know. They're going to coach you through the process, and of course they're really going to expect you to sign up and pay a retainer to be working with that attorney before they do a lot of work in this area. So don't be surprised if they ask you to sign up on board before they give you the names of potential investors that they know out there working in this area. All right. If you have any other questions, let's carry on. We have one more module. And so the last one we want to talk about today is the purpose of the pitch. And one thing that you'll find is that pitching as a skill is very important in raising funding. And that's because you have to go out and tell people what you're doing, and you have to do it in a succinct and compelling manner. I talk to a lot of people who say they can't really tell me what they're doing in less than an hour, And unfortunately, I don't have an hour to sit there and figure out if I really am interested or not. And so you really need to hone your skill in how you propose your business to prospective investors, because your skill will directly impact how many people you get through. So the pitch is basically it's your business case in a nutshell. And what you're doing is it can be done in a minute, 5 minutes, 10 minutes, or more. One technique whenever you meet a potential investor or new investor is ask how much time you can have, and then just scale your pitch accordingly. So you need to be able to do it in 1 minute, 5 minutes, 10 minutes, and if they give you more time, a half hour, an hour, that's great. You can actually just fill in more detail as well. For fundraising, it's typically 10 minutes is what you get when you go to pitch to a group of investors or first-time investors who aren't sure if they're interested or not. Well, they can give you 10 minutes, and so you want to come up and spend some time in putting a story together that you can cover in 10 minutes and cover all the topics that go into it. So pitching is really important for what you're doing. Now, most entrepreneurs at first misunderstand what the pitch is for. They think it's the opportunity to tell the entire story in all detail to the investor. But if you're only given 10 minutes, you really don't have enough time to do all of that. The real purpose of the pitch is to generate enough interest to get a full 1 hour follow-up meeting, if not more time, from the investor. So you're just out there giving them the teaser so that they're interested, that they will come and they'll spend more time with you, if not now, maybe a couple of days later or a week later. And so the way I liken that is to the movie trailer. When you go to the Cineplex and you go to watch a movie, the purpose of the movie trailer is not to tell you the entire story, but instead it's to bring you back to see the full 2-hour movie a week later, because as you may expect, they want you to pay another $10 to see the full movie beyond what the one you're paying for today. So, and what you'll notice is that they show highlights and clips of exciting scenes and interesting scenes and so forth, but they don't tell you enough to give you the full story. But if you want the full story, you have to come back later for it. So the pitch, who is the pitch for? I've often had entrepreneurs tell me, well, I don't want to go tell my story to that guy because I don't think he's a worthy credited investor. And I always caution them, well, you know, they may know other investors. And so you want to pitch as many people as you can get in front of. If you have an efficient 1 or 5 minute pitch, you can do that with more people. But oftentimes people who may not be accredited investors may know people who are accredited investors. And if you give them the story, the 1 minute or the 5 minute version, they can put you in touch with other people. And what you'll also find with your pitch is that once you have it developed is that you can use it not only with investors, but you can use it with partners, suppliers, customers, and other people. What's different is the ask at the end of the pitch. For investors, you're asking for money. For partners, you're asking them to sign up to work with you on some terms. For customers, you're asking them to buy your product. For employees, you're asking them to come work for you. And what you'll find is that many of the elements in the pitch for the investor are the same elements in the pitch to these other people, so it's worth putting some information into it. And I always bring up the fact that I've seen a lot of pitches out there, and I've often found that those who have a really strong pitch can actually make a weak deal look better. When you get back down to it, they don't have as much, but the way they're pitching it and spinning it, they're getting a lot further than otherwise. And then the counter to that is I've actually seen people that were not as good at pitching can actually detract from what is really a very strong deal. And so what you'll find is that the pitch really amplifies or mutes what you're doing, and so you want to make sure that you're amplifying by putting in a good one itself. So the key thing with the pitch that I always bring up to entrepreneurs is you want to highlight all the values in your company and not just the product. It's often the case that the entrepreneur that comes out to pitch for the first time wants to spend the majority of their time telling the investor about the product and how it works. And while the product is important and the investor wants to know about it, that's only about 20% of what the investor wants to know. They also want to know about the problem you're solving, the target market you're going after, the team you're putting together, the financials that you have so far, any intellectual property. And so all of these values are important to put out there. So you can't treat the investor like a customer because they're not a customer. The investor is interested in buying the company, not just the product. Yes, the product is a part of that, but you have to put these other things in there as well. And the other rule with pitching is that if you don't mention it, it doesn't exist. And so if you don't mention you have sales, the investor walks away saying, well, they don't have any sales, sales are zero. And that may or may not be true. So if you have any values in the company with sales, marketing, etc., make sure you mention it. Give yourself credit for it and make sure you put out there that we have something in this area. And then in a follow-up meeting, you can actually expand on that and put a lot more detail out there by itself. So in your pitch, it should include the problem you're solving. I like to start with that because if I know what problem the entrepreneur is trying to solve, I have much more context about the solution or the product that they come up with in the second case. And then you want to talk about the team. Who are the people that are going to take this? And I know many investors that it's all about the team. They look at the rest, but really they're making a decision based on the team itself. Then you want to talk about the market that you're going after. And then you want to talk about your competitive position. How do you come up against the competition? And then the rest of it has to go into the financials, the fundraise, and most importantly, the exit. How does the investor get their money back? And so these are key elements that you want to cover. And we have executive summary templates that make sure you touch on all the key points that investors want to hear. Also, what I advise entrepreneurs is that you want to make your story more compelling or interesting is you might want to use the story form for it because people like stories. And so this one way to communicate the pitch itself is to tell it as a story. And oftentimes it starts with, well, I had this problem and I was trying to solve it. I looked on the market. I couldn't find a solution. So I created my own, and then other people saw it and they wanted to buy it from me, and so I started a company. And that kind of storytelling is kind of interesting because you pull people into it and it gives a logical flow to the process of how you built the business and how it came about. It can't be a long drawn-out story, but story form can be effective in telling other people what you're doing as well. So what questions do we have about that? I'm going to open this up, see where people are with this. So the first question is how much time will investors give me for my pitch? And the answer is investors have different schedules, they have different time, they have different interest level, and so it will be all over the map. Some people will give you 1 minute, some will give you an hour and a half or 2 hours, and you'll find everything in between. When you go pitch, what you're trying to do is touch on all the values. As we said before, it's important to give yourself credit, even if it's just 3 words. We have patent pending technology. You give yourself credit for having intellectual property versus not saying anything at all, in which case you don't get any credit for it. And what you're changing is not the topics, but the amount of detail you put on each of the topics as well. So one thing I always recommend is write out a 1-minute fast pitch. Go and actually write out all the values and then craft that into a 60-second discussion or explanation about what you're doing, and you're using keywords and key phrases in 1-minute pitches to describe what you're doing, and it doesn't have a lot of detail, but it gives people a thumbnail sketch of all the different values you have in your business. And when I talk to entrepreneurs, they tell me the best tool they have, or one of the best tools they have, is their fast pitch because they use it every day. You don't have to have PowerPoint, but when people ask you what you're doing, you're giving them the 60-second version. And I think that's very valuable to have because I sometimes see entrepreneurs spending an hour with a guy and they don't know if this guy is interested in their deal or not. And instead of spending an hour and then finding out they have no money, they're not investing, or they're not interested, they don't want your deal, you give them the 1-minute pitch and then check interest. And then say, well, in 1 minute, here's what we do. And then at the end, ask, would you like to learn more? Are you interested in investing in this area? And then if the answer is yes, we're interested, well, now go spend an hour with them. And then if they're not interested or they don't want to invest in this area, well, then you just saved yourself 59 minutes to go do with something else. Because hour-long pitches take up a lot of time. 1-minute pitches don't take up nearly as much as well. Where do you practice pitches? The best place to practice a pitch is with other people. I don't believe in pitching to the mirror. I believe in sitting down at the table and just talking through your story to other people and asking what they hear, what they didn't hear, what questions they have. So before you go out to an investor group, if you haven't gone before, take your slides, sit at a table with other people you know or people you can get a hold of, and say, can I just take 10 minutes to show you what I'm doing, and just talk through at the table what you're doing in an informal setting, and then you'll get practice, and then you ask for feedback. What did you hear? What did you not hear? What questions do you have? And then see what the feedback is. So practicing is a key part of this. You have to practice it quite a bit in order to get good at it. I help teach accelerator programs or mentor people in accelerator programs. And it may or may not surprise you, but 1/3 of all the time that entrepreneurs are in an accelerator program, they spend in pitch practice. And so if you have a 3-hour session each week, 1 of the 3 hours is spent where the entrepreneurs are standing up, practicing their pitch, telling other people what they're doing, and working out the messaging. So don't underestimate the amount of time it takes to make a good pitch. It takes a lot of work to really craft the slides and the message so it's very tight and cogent and covers all the values that we're talking about here as well. Are there any other questions at this point? We're at the end of our 4 slides, and we may finish a few minutes early today. As I said before, we'll wrap these slides up and send you a copy of the recording and the slides this evening. Are there any other questions you have at this point? Also, if you have questions you would like to discuss by phone or in person, drop me an email. Just reply back to what I send you tonight, and we'll line up a time to sit down and talk about your deal, either in person or on the phone, and give you some more coaching that's specific to your case. What we're talking about here is high level and general and basic, but we're happy to spend some more time talking about your situation and how you can move forward with it. So the question is, do you have some good examples of 1-minute pitches or where we can find the longer version? And the answer is we used to have those on our website. Because they've, over time, have gotten old, we've taken them off. But what you want to do is Google fast pitch, elevator pitch, and you'll find many, many examples on YouTube and on the web. So if you can't find them, let me know. I'll send you some links to fast pitches or elevator pitches, and you'll find some really good ones out there on the website, both in general web and also on YouTube, where people have actually done pitches as well. You'll also find a lot of video recordings of pitches that are of the 10-minute length and the 20-minute length, and I can point you to some direction where you might find good examples of those also. The pitch often changes a little bit based on what sector you're in or who they're pitching to, but there's many examples on the web to go look at in order to hone your pitch as well. For those who are making a pitch, what I recommend you do is take your executive summary. If you've never developed a pitch deck before, go and look at the exec summary and make a slide out of each topic. Each topic on your exec summary put as a heading of 1 slide. Go back through and on each slide put 3 bullet points on each slide and type in what do you want to say about this. Not what you're going to say, but what's your message? What do you want to communicate? And put 2, 3, 4 items in those bullet points. And now you kind of know what the topics are. You know what you're going to say. You then go back through those slides and you craft those, you reword those bullet points into what you actually want to say or how you want to say it with 5, 6, 10-word bullet points. Oftentimes people go build pitch slides and they just cut and paste huge amounts of text and other things onto the screen only to have me come and take it back later or take it off later because nobody can read all those words. It doesn't communicate the message you want to put out there. So the first thing you want to do is figure out what your message is on each of those topics, and then you want to go back and figure out the best way of saying it. And in the end, you don't have that many words on a slide. One of the best slide decks I ever saw had at most 30, I think it had about 35 words in the entire slide deck. He had one or two words on every slide. It was a minimalist approach, but it was very effective because we weren't distracted away from the speaker looking at trying to read the slides. We were focused on the speaker himself. So in the end, what you'll find is slide decks don't need huge amounts of text. What you need is to make sure that all of the messages and the values are somehow communicated properly, and it doesn't take a lot of text to do that. And then, of course, you can use the appropriate graphs, charts, and other things that you want up there in order to communicate that. Any other questions at this point? If not, we'll go ahead and sign off. We're about 10 minutes before the end, so we finished a little bit early today. Another question. Is there any reputable angel group or association in Austin? So in Austin, there are several angel groups. The Central Texas Angel Network is one group. It's 100 members, and you want to check out the Central Texas Angel Network. You also want to check out the Baylor Angel Network. While they're not located in Austin, they're headquartered out of Waco. They have pitch sessions in Austin, and they have many members in Austin, and you want to go check out those guys as well. And then there's a number of other angel groups that are not far from Austin. So in the College Station is the Aggie Angel Network, in Houston is the Houston Angel Network, and in Dallas is the North Texas Angel Network. So if you go to the website, the Texas Entrepreneur Network site, just Google Texas Entrepreneur Network, there's a button that says Texas Cities, and under that is Austin. Click on that, and that'll take you out, and it will list all of the angel groups that are in Austin or in the Austin area that you might want to consider. And if you have any further questions, I'll be glad to talk with you offline about which angel groups might be best for your deal. Any other questions? I guess we'll go ahead and close it out for now. Thank you guys for coming in board and watching today. And if you, like I say, if you have any questions, give me a call or an email, and we'll line up to discuss your particular situation. We'll see you the slides tonight, and we'll see you this time next week for Module 3, and we'll have 4 more modules to go through. Thank you guys so much. Have a good weekend, and we'll sign off for now.